Hi, Joe.
Hello.
I'm excited to have you as a guest today. And let's go. Please introduce yourself to our listeners and tell me a little bit about you and your experience in property management.
Yeah, so I'm Joe Mallon. I've effectively been in property for 2 decades, having come from a construction family. If you like, my dad was a builder, and I've been lucky enough for things to fall for me in the right way. That I took a career path through property management, having uh, returned to uni, not knowing exactly what I wanted to do at first. I realised that unlike other office jobs, property management was much more suited to me. It was far less boring than other office jobs because I had that construction background. So straight away, I was able to get some stimulation, if you like, in being involved with building works. And I knew a bit more than the average person about building
Yeah.
works. And that's how I came into it. I made a conscious decision after a failed attempt at music in my early 20s to divert into, and with the view of becoming independent from my parents, I guess, to property management. I started off thinking I was going to do that while learning how to be a building surveyor. It didn't work out that way. I realized I would be better off in a more general capacity, and that's where my career headed. Fast forward to where we are now, I am the co-managing director of JFM Block and Estate Management alongside my good friend and business partner, James. And I'm also the founder of a very small training consultancy, which is my little pet project, the Block Coach. I'm a
Oh,
chartered
amazing.
surveyor and I'm a fellow TPI.
Amazing stuff. All right. Well, I will put your details also displayed. So if anyone would like to contact you, they can do so
Thank
directly.
you.
All right. And tell me about your day. How is your day looking like? I know it's not the same every day, but tell me a little bit more about that.
I mean, it's incredibly varied and overwhelmingly my role as co-MD of JFM takes center stage. It is nice being a co-MD, effectively a job share with James. It does leave room for some other projects and a little bit more variety, perhaps, than if you're doing it by yourself. So we're blessed to have that arrangement.
Absolutely, you are.
Yeah. I think you were mentioning to me recently, Ralitsa, that you had issues, well, like most people really, where they're the sole MD, and people often say to me, "Oh, I wish I had what you had."
Yeah, yeah.
I think James would agree. There's pluses and minuses to sharing roles, but overall we benefit from it. But in terms of my day, it can be very varied. So when you're a co-MD of a company, or while also having a smaller business on the side, it can vary from week to week. And but the key thing is that my role is to hold together the three main component parts of JFM Block and Estate Management, uh, alongside James, collaborating with James. And the three component parts are business development, so sales and marketing, the main service, which probably takes up the most amount of time, so the service part of the business, and what we call business operations. So that includes finance, payroll, and the general administration that so many people don't realize is needed that goes into a company. And it's
Yeah.
about talking to those three parts of the business and supporting the heads of those areas in whatever way that I can, so that we can continue to improve the company day in, day out. Is it, and that can be anything from fast paced meetings to getting out to pitches. I still go in lots and lots of pitches,
Oh, that's great.
to spending time understanding how we can improve our telephone system once again, because in every new incarnation of JFM we need a new system of some kind. Something's becoming outdated, a new thing needs to come in. So extremely varied and often divided into quick fire half an hour slots,
Mhm.
and sometimes longer for the brainstorming sessions.
Yeah, absolutely. Well, you're still very much involved with obviously property managers in JFM, and as you said, you just go out for tenders, and I'm sure you're helping with the onboarding of a property because you've been, right, or estate. So you've been, you know more, you've met the directors, client initially. So you are helping, I'm guessing, yeah, with the onboarding. And how are you supporting the property managers, which are obviously to take over? Because sometimes in my experience, I've managed bigger estates, and going to tender, they kind of know that person, but then being introduced to property manager, they kind of still continue, talking to you and
Yeah.
contacting you. And that transition is also difficult sometimes. But in terms of giving all the information to your property manager or, that department, how do you do the transition? How do you help them to understand the development? Do you go with them or you go on your own? Or if you do go on your own, like how do you navigate that?
It varies from site to site. So at JFM, we have a business development manager, Dan, who's absorbed a lot of the things that I used to do even 2 years ago. And he has a business development assistant reporting up to him. We also have a mobilisation manager, Philippa, who oversees the mobilisation team, and that contains property managers and administration support. And it's probably the most diverse team within JFM. The others are a bit more orthodox in their setup, like a property manager, team manager situation with client accountant supporting and so on in pods. Whereas the mobilisation team is a bit more bespoke. You have the mobilisation manager, Philippa, who's responsible for project managing new sites into the business. And we use task management software to do that. And then Dan, who sits on our team, reports to me for the purposes of sales and marketing, and Philippa for the purposes of his very small portfolio. It's quite mixed and bespoke and hybrid, that team. And that's necessary for where we are, which is very mid-sized. At some point, Dan will have no portfolio, or that role will have no portfolio, and we might change things around, and we might develop a full-on business development department. But until then, it's still quite close-knit. And so Dan will report up to me at the earliest stages of a new site coming on board with things like the contract agreement and things like that. And then Philippa will report up to me for things that happen later. So let's say we're in early management phase 1 and we're struggling to get all the information that you need to get from the outgoing agent. Actually, I'm also blessed at that stage that we have a property management director in Jake, who's heavily involved with that process, probably more than me. But I'm always there just a step above Jake then to sort of assist with my knowledge, given that I'm often involved with the larger sites, especially at the tender stage.
I think with bigger estates is definitely there might be a little bit of lack of information and documentation that you might receive, but I must say, obviously, we are managing way smaller buildings, and the amount of time that the handover is being close to zero. It obviously it's so many difficulties for us, to manage, and you start from zero, but it's not a zero because there is information somewhere, or sometimes the agent says, well, we've never been past anything. And it's so difficult, to continue. So because of the bigger estates that you manage, you probably don't lack of that so much. So,
Wow, you'd be surprised. You would be
really?
surprised. Yeah. I mean, we've
Oh,
come
wow.
across all shapes and sizes. And I also recall way back when we started JFM, taking on smaller buildings was essential lifeblood for the company in making us survive. And we took on what we call shoebox handovers. We took on handovers with uncooperative agents. Not very common, but it happens when you're running blind. We've taken over from agents where they've gone bust and there is no information coming, and you're having to play detective with what you can via the directors, for instance. So we've had all shapes and sizes actually of handovers, and I've seen them all: the good, the bad, and the ugly.
Yeah, I think the financial side is more the difficulties in the financial side. If you don't get any accounts or, any opening balances and so on. I remember back in years ago just at the beginning when I started, I was given a portfolio from a freeholder that I worked with, and I went to take the information from the agent, and they basically gave me a back of keys, like 50 plus keys, all loose. They were not tagged or anything, and just a little folder with some information. And I was like, why? So we were talking about handovers, and have you ever, like within the handover process, seeing that things are not going great and this development might be an issue or just a block, a small block? Have you ever basically said, well, sorry, but we are not going to take over the management and,
Yeah.
Find someone else.
Yeah. And I'm sure you have as well.
You've got to, yeah. Yeah.
Um, the issue that I can remember sticking out the most was when we had a beautiful Thameside development in Reading on the river,
Yeah.
and they really took to us quickly, and it became quite a quick sale, if you like, in that they bought into us so quickly to board, and they were lovely people, and we started the process of onboarding. It then transpired for various legal reasons, which are hard to go into here in
Mm.
great detail. They didn't really have the legal authority to instruct us, despite it appearing, for all intensive purposes, that they did when we were going through the initial qualifying paperwork.
Yeah.
I think they signed an agreement with us, but as time went on, as we went through further checks, we just kind of realized we can't take this building on. That they
Mm.
were sort of locked into a sort of manager and a contract situation, and it wasn't entirely clear that that was the situation from the outset. We learned a lot from that period about qualifying your leads, because at the end of the day, it can take a lot of time to get up to that point, and there's a lot of wasted time if you don't get a contract at the end of it. And it was a bit of a lesson to us. We had egg on our faces, really, and felt a bit embarrassed that we hadn't done more to check that the legal situation was watertight. But we learned a lot from it.
Yeah, it definitely teaches you, but it's also unexpected, right? You're not expecting that you will get yourself in such thing, but these are exactly the scenarios we're talking about here, right? Which leads me to, obviously, I want you to tell me, a scenario where it was challenging, it took months, and how did leaseholders, directors, contractors, who was involved, what was the outcome, and what did you learn from it? Similar to what you said, but I want you to give me a little bit more about the story.
Okay, right. Well, with that particular case, maybe that's not the best one, because we didn't start with the date of effective management, and so we didn't actually end up managing the estate and then walk away. Trying to think of a time when we actually walked away from a site that we've taken on. Um, I don't I don't think I could say that there's one that we never took on once we'd been through the pre-start, what we call the pre-start phase. I can't say that we'd left within the first 3 months or anything like that. But I've had several aborted managements where we've realised what we call the pre-instruction phase, and we're not going to be able to continue. We also had another issue, for example, with a block of flats where we were absolutely sure we were going to get the business. It was close to JFM's HQ, and in that particular case, because it was so close to development, it was large enough in size, 200 units. I still feel we're made to manage this building, but they were locked in with an agent that they got where just after their RCM process, and for various reasons, it wasn't made clear to us that there were some political disputes on the board of directors. And so what we were doing is we were giving out lots of advice. We're really pushing the boat out for this block, and we're
Yes, I
spending
can
lots and lots of
imagine.
time talking through directors' responsibilities and so on and so forth. We were reading through lots of documents, and it looked to us initially like this director that wanted to move to us on a board of two had a really cut and dry case for just moving the contract. Um, but it so transpired that the other director uh, brought some evidence to the table that some of the decisions that had been previously put forward to us as bona fide decisions of the board weren't in fact bona fide decisions of the board. There was another party involved who may or may not have been a director, or should have been a director, or may not have been, depending on who you're talking to out of those two
Yeah,
directors. So it became unclear as to
I
what the
see.
composition of the board was, because there was a dispute between the directors. And so again, what you had is a political situation where it became so difficult, despite it seeming very clear from the outset that we were about to take this building on, that we could not continue with the takeover of this development. We had to walk away. We had to cut our losses, and just
Yeah,
accept that we'd given advice for free and spent many hours digesting
yeah,
legal information, spent time speaking to solicitors from our network,
yeah,
and all that you could say was for nothing for that particular round of instruction. but we try to take the best from it. And what we learn is, once again, is how to pre-qualify your leads better, really delve into the situation, try to meet all the directors if you can, not just one person who says that he speaks for the whole board, and try to pre-qualify that before you move ahead. Definitely a lesson for us. But on the other hand, what I find with these things is, good karma swings around, and giving out free advice, if that's all we've done, it's not the end of the world. This chap that we reached out to, I think, thought highly of us, and I think he'll go on thinking highly of us. And if the opportunity comes again where the politics at that development calms down, we may get that other shot.
Which will be great, right? Because all the time that you've invested with the legal advisor, and like you said, it's not just JFM, it's other bodies that you are involving, and it's their time. And we all work with others who are helping us, and just because we are in the same circle. But it's the lessons that we learn. So it's not for nothing, and you can only think it's the time that you've spent. But how about another scenario where a project went for a very long time, and it is involving the management of the building, the maintenance of the building, and ceilings falling out, or roofs or whatever, like structural issues. We have loads of those, right? That leaseholders sometimes don't understand, and they want to be fixed within a space of time, but you don't have the magic wand, right? It takes so much time, legal involvement, sometimes solicitors to draft emails and letters and so on. If it's a bigger development, is to communicate with everyone, give them the reasons of delays, and then collecting funds and so on. So it could go for, months and months, and someone is suffering.
You're reminding me of several situations in the history of JFM. Of course,
pick up one.
Yeah, when you take, I'll try to pick the best one. Just a bit of a lead in. Somebody asked me yesterday at the pitch that I was at yesterday, because I was talking about resignations and how we had resigned some clients, and some people might think that's a strange thing to talk about in a new business pitch, but I'm very honest in my pitches, and sometimes people get a bit worried in a new business pitch, but I'm quite upfront and honest with people. And the chap said to me, well, under what circumstances might you resign us? Well, what have we got to worry about? We don't really want to have someone resign us. And I explained, listen, it's actually relatively rare that we would resign a client. And where it comes about usually is for situations like you've described, where perhaps the client is unwilling to address after several elements of advice have been provided. They're unwilling to provide a resolution to accept your advice and get the building fixed. If they're not accepting your advice, a client, to get a building fixed, at some point your situation is going to become untenable. And I can think of an occasion where we took a building on in our early days in Tottenham, and the place was in a very bad state. Unfortunately, the RMC was dysfunctional. This was a block of 20 flats. In those days, we were looking after those size sort of buildings. To be fair to them, they by their own admission, they didn't really know what they were doing. They needed help. Things had become dysfunctional, and they were really. Again, it was another quick sale, if you like, in that they quite quickly instructed us. We went to meet them, me and James, in those days at a pub in Tottenham, and there was no objections to taking us on. They could see that we knew what we were doing. They hadn't really had anyone else that impressed them yet, so we came in, and then we started proposing, right, guys, we've got to do something about your major work cycle. The building hasn't had an external redecoration program in years gone by. That's why everybody's flats are leaking. You haven't made the building watertight or sought to for this amount of time. You go for a lot of energy. You put together a capital expenditure program for them with what you can get, and then it's not accepted. And then you put in place an alternative budget, and then you run with that, and you run the operational costs for a bit. But then you come around to the next budget season, and the situation is worse.
Yeah.
And the condition is getting worse. And the longer these guys are going to put off the investment decision, the bigger the ultimate bill is going to be
Yeah.
for whoever has to pay it. But also what's happening, of course, is you're getting into a situation where health and safety items are not being addressed as quickly as they ought to be. And then you start going down the track of it's okay, this is untenable now, because if we can't get the health and safety basics met at this building, we're going to have to become a bit more assertive. And that's when we kind of say, well, listen, it stops being just a recommendation. It's a recommendation, or we're going to have to
Action,
sadly resign
basically.
the contract. And in that particular case, we did have to resign the contract and move on to a new agent, because not without the proper investment, we as managers are taking on a huge risk alongside the client, the directors, the freeholder, whoever it may be.
Yeah.
And in that particular case, the building had become so run down, and the directors were intent on keeping the service charges the same, and that was untenable, and we moved on.
Yeah, and in the same time, you're getting emails from leaseholders saying, my flat is leaking. You basically, my habitat is is ruined. I'm not enjoying my home.
Yeah, and that's a chicken and egg situation, right? Because the leaseholders, from their point of view, £1,000 is a lot of money.
Yeah.
I'm paying £1,000. It sounds like a lot on its own to you
To
personally,
you, yes, to us.
to get this building fixed and look at the state of the building.
Yeah.
So it's quite a hard sell when a building has gone that far down the line to then turn around and say, well, actually, the solution here is you need to pay your company via us actually more like £2,500
Yeah.
a year to get this building where it needs to be, and it's going to start looking good. It's a
Yeah.
hard sell when the building's already looking bad. To say, well, I'm paying you 1,000 and it looks terrible right now. Why should I pay you more money? It's a bit of a weird situation.
Mhm.
But that is a life we chose as managers.
Absolutely. But I think that the issues that, like, you are managing the bigger estates and you probably don't have these issues as much anymore. Maybe you do. But managing these buildings, anything from, smaller units to 20, 30, 50, they're always the directors who feel that they know more and they can manage the buildings better than you. And when you start recommending these major works or any works into the property, they see it as like you're trying to make money, to get your percentage or so on. And I've had this conversation with few in the past, when you're like, you just want to make, to take your percentage because you got a project managing it. And I'm like, I can't tell you the amount of emails and calls we are receiving from leaseholders who are, suffering because there is either the leak, either ceilings are kind of with acropores, and it's just, something that we cannot in any way. So then at some point you direct them to contact the directors and to speak to them. You ask for AGMs just so this can be addressed in front of everyone. Directors never have time. And it's just so many scenarios that at some point you as property manager, you are trying to resolve something that it's more of a bigger issue than actually the directors see. Because a lot of the times we get this, the stop comes from the directors, right? They're like, no, we're not doing this. Like you just said, no, we keep the budget the same. Well, that's not going to take you anywhere when you have to spend thousands of pounds to fix the leaks. And it's just one of those things, is how do you win that?
Yeah, the first thing I should say is that we've got several excellent directors who are very switched on for their communities. Um, and do a fantastic job. I would actually say the vast majority of our directors in our portfolio are very good once they get the right advice.
Yeah.
And once the advice is expertly delivered, they generally accept our recommendations. But I know what you mean. Ultimately, if you put homeowners or lay people in control of a development, there is going to be a percentage. It's just human nature
Yeah.
where short-term interests might take hold, and we're living through cost of living issues, and it's
Right.
understandable. And often, what happens is investment gets pushed down the line, and that's the natural flare-up point for a manager and a client. And unfortunately, sometimes a smaller percentage of people will then turn around and start accusing an agent unfairly, very often, of
Yeah.
of wanting to make money out of a situation. the thing is, I suppose we have to accept that there are some agents that do engage in poor practice. We need to remember that as well, and that's where a lot of this comes through. And so we need to make that point here, and I hope maybe somebody listens, that when we raise a service charge budget, because it needs to be done for health and safety reasons, or whatever the case may be, we stress about it, right? We
Oh
don't
my
sit
God.
there in front of the Excel spreadsheet going, "Oh no, oh great, we're going to increase the service charge budget," because that's going to really, really uh, be a joyful experience. It's a really hard experience for most good block managing agents out there when they sit there and they crunch the numbers at the year end in the lead up to the next financial period, and they kind of realize, oh no, because of this legislative change that the government has brought about, or because of this problem in the insurance industry where a lot of these problems come from,
Yeah.
um, we're going to have to increase this budget. Otherwise, we are going to break this building. And that's the reality of it. We don't take joy in that whatsoever.
Oh,
I'd like
not
to
at all.
kind of broadcast that message to the world out there. It creates work for us. It doesn't, it'd be far, far easier for us to be able to figure out ways of reducing service charges. Very often we do, but in recent years, it's not been possible. When you look at the wider scope of society, everything is increasing for all sorts of
Absolutely.
economic reasons.
But we also tender, like we go and tender for all the services that are included in the search, right? Because you can't continue. And as much as, working with one contractor, insurer, whatever, we've got to do the due diligence from time to time to make sure that we get the bit. And this is where the saving can come from, right? Or even speaking with the current contractor. And I can't tell you that so many times when probably someone will be like, "Oh, you mad, Ralitsa, for doing it," but I've not increased our fees to the amount I wanted to, just because I'm trying to keep the budget down, which is,
Yeah.
the amount of work we do. But I've done it,
I
so
don't think anytime soon the managing agency world is going to get much sympathy from the general public, especially with the way things are in the national press, with the lack of balance. And that's a real shame because there's really good operators out there. I mean, I make the point once again. We've got some great proponents of ours that are our directors who still give us references and have worked with us for years, and I thank them so much. And they're amazing community leaders. But yeah, it's a tough one. It's a tough gig because it's like anything really, isn't it? It's like politicians. Nobody really likes the guy who makes the decision over how the money is spent. There are tips and tricks that I found over the years that help, though. I mean, you mentioned the point about the director. I do find sometimes we overextend ourselves as property managers, and I think it's something
mm,
to think about. Should I be giving this advice directly? Should
yeah,
I be the middle person for this advice? Because let's face it, if you need to sort out a building that hasn't had investment for a long, long time, you're going to need a building surveyor on board.
yeah,
And I find cleverly utilizing that building surveying resource is so important for problems like this, because they can be a godsend. A good building surveying company with block management experience, and there's some great firms out there, especially ones that are willing to come to a directors meeting or an AGM. So I can recall one
yeah,
development in Woking, which we took on 90 flats, and it had the classic situation: 40 or 50 years, I think, under investment in the estate, and they had reached the end of their ability to be able to do that. And they had, I think they have 7 individual blocks spread out, low-rise blocks on a large estate, 90 units
mm,
in total. Huge, sprawling estate grounds, lovely building. All the roofs bar one needed replacing. All the drains had collapsed. The internal areas were in a poor state. They hadn't the funds in their reserves to deal with it, because for years and years and years, um, a very well-meaning, good, hard-working, on-site management, self-managed situation or
yeah,
setup had kept the service charges artificially low. And I use that word um, because I think people should hear it. Artificially low. It is. I can bring down service charges all over the place
yeah,
with a wave of a wand that budget season by underinvesting in the reserve fund, and that's what happened sadly at this estate.
yeah.
But this particular estate, it caught up with them, and there was no other way around it other than to hugely increase the reserve fund, the contributions.
Mm.
and to get them back on track. And that was the only way that we were going to be able to restore property values at this estate. And so what we did was we got a CapEx plan, excellent company called Thames Valley Surveying. I'd encourage anyone in the Berkshire area and surrounding areas to check out. And we teamed up together. I knew my boundaries as the property manager. They knew their boundaries as building surveyors. And we came up with a joint plan, me on the sort of consultation funding side, them on the building condition side. And we built a sort of 1.5 million investment plan. In the end, the estate accepted a 1 million investment plan, which was like a version 2, which was kind of minimum standard that we were willing to work for.
Yes.
Be able to get this back on track. And what, going back to my original point, what made that work, at least securing the 1 million investment for this estate, is that the building surveyor was there and he was very knowledgeable and he was very amenable and very open. And we sat in a kind of panel situation, and it was a very, very packed AGM. And after the AGM, we took some votes on what people were able to go for, because that's what the director wanted. But when people were asking questions, well, why have we got to do this? Well, why have we got to do that? You know, John would get up a photograph. John Wren, one of the building surveyors there, who's one of the co-owners, and he would go down, break down into some detail, technical detail.
Yeah.
Why the concrete needed to be treated, why the roof had to be replaced by XYZ method. And I think sometimes bringing in your building surveying colleagues where it's warranted.
Yeah, I guess.
Directly, so people can hear it directly, rather than it coming through you, given that they've got that MRICS in building surveying, as opposed to us who are on the property management side of things. It can be the solution that most people need.
Absolutely. And you're not a surveyor, right? You're just a property manager. So you're passing information, but it's like ping pong of like, going back and forward in emails, or at the AGM, you just don't know what to say. Like I find myself sometimes with, answering questions like this. It is definitely out of my knowledge. So how can
I? It's an art form. It's an art form to get it right, I found over the years, because you can't get the building surveyor directly involved in everything. And sometimes it saves everybody time to simply say, well, that's what the building surveyor said, here it is, and then everyone accepts it. But sometimes if there's going to be that toing and froing and debating, you kind of go, whoa, like me being a middleman here is not helping the situation. If anything, it's hurting the situation. Let's bring in XYZ surveyor into this table until we resolve this point. Get the point resolved, and then we can go back to property manager director relationship once the point's resolved and move forward.
I definitely have a situation similar where I'm waiting. We've done the surveyor's report back in 2020, I believe it was, beginning, and to date nothing is being done. And every year we send the budget. We also, they're building a great reserve fund, but I bring the question, are we going to have a meeting and discuss? Because the surveyor's report was done a few years ago, and the more we delay, they will have to come back and retender.
Yeah, but I think it's really important as well to understand that your competency level. And so you mentioned surveyors. I mean, obviously, I'm a chartered surveyor, but I'm technically, I'm a property manager who's gone down the residential pathway. I think this needs to be brought out a little bit more into the conversation as well. So what makes me a surveyor? Why can't I advise? Well, I've gone down a different pathway to a building surveyor. A building surveyor's job is to advise on things like building technology, method, construction, whereas mine is a bit more general. It's actually quite broad how you can become chartered as a residential surveyor. Yeah. And most of my competencies are property management competencies, just like you, Ralitsa. Yeah. So sometimes I don't think we shout for ourselves enough. We are, all property managers for me are surveyors. Some of us are chartered. It's just some of us haven't had the opportunity yet to sort of hone our competency. But basically, our competencies are fundraising, consultation. These are really important expert things that actually building surveyors wouldn't be that comfortable with. And so our job is to work on things like the fundraising, the lease compliance, and the overall cycle of maintenance management for a building. The building surveyors then coming and they're experts of running the project, and let them be experts of running the project and advising on the
Absolutely.
material aspect. Let us be experts in the fundraising and so on.
Yeah. It exactly is obviously the skills that we have and how we communicate, because we are the one managing difficult conversations with residents, directors, leaseholders, even contractors sometimes, because you're trying to understand and obviously pass it on. As you said, you can't always bring the contractor or surveyor, whoever, on AGM, and it's just what is the best approach towards passing on that information and the communication with everyone, because it's difficult, right? And very often, if it's bigger building, you receive these emails and calls from everyone wanting to individually know. So what's your approach what's BFM's approach on situations like this?
I think it was all about the variability of communication types. I mean, somebody was asking us yesterday at a pitch, the pitch that I keep referring to, how do you communicate in this situation? How do you communicate in that situation? And actually, the truth is, everything has to be taken on its own merits. Every development has to be taken on its own merits. So
Yes.
one of the tools that we developed is a system of bespoke apps for our large developments, and that is essential. We work with Project Arc, another great company. Giving a few shout outs here today. And we work with them and we actually have a partnership arrangement with them where they've connected their software, which is a resident engagement software piece, with the back end of our task management system. And what that means is that a resident can report an issue on their phone, and it's in a WhatsApp style environment. And it's a branded app which reflects the estate. So, for example, we have the Battersea Reach app by JFM, powered by Arc. And so somebody would log in and say, well, there's a light out, take a photograph of it, buzz it over to the property manager. The property manager can see that it's a genuine issue. They can hit a spanner button and it connects it to our back end. And then they get little automatic updates. People love that in highly subtenanted buildings where actually lots of them don't want to have that much contact with their property manager, and many of them, just want to make sure it's done, and they like the tech aspect of being able to just get it sorted on their phone.
Yeah.
Like online banking, that works, but we can't apply that, as I said yesterday at my pitch, to every single development. There's an element of
No.
what do you want? What do you think this community needs?
Yeah.
And so that becomes sometimes,
Tailored, isn't it? Yeah.
yeah. So sometimes it becomes an optional extra, that app. I'm at pains to mention this because sometimes I'm at pitches and people start getting really nervous, and often they're older ladies or older gentlemen, and they're saying, "Is that how you're going to communicate with us?" Like, no. Most of our directors these days, it's old-fashioned email and calls and meetings. That they're still very much what happens, and for the wider population as well. Many people just want to email. Fine, you have to be able to, I think anyway, satisfy multiple different channels and be competent at multiple different channels. And you've got, what I think is that you've got to make the portfolios manageable enough for the PMs. So a PM can have enough of a chance to assess each estate that he manages or she manages on a case by case basis, and then bring the right channels in, be it an app, be it more traditional means like letters and so on and so forth.
Yes.
That's how you've got to do things.
You definitely have the mix of residents in the building. I'm having a bit more difficulties with the self-managed, because they obviously don't have that habit of working with agents, and you go and pitch and then they tell you it's a very easy running blog, like there is no issues. And the moment you take over, it's just like an explosion of emails and calls about stuff. And yes, everyone is different. Some would like still letters, sent to them. Some would like a call, some would like it varies so much. But it would have been easy if everyone just uses the app or the softwares, because it's becoming very digital, right? We all have different, and there will be guests. Obviously, we will talk about tech and AI coming into property management, because it is helping us. It is helping us enormously and saving us time, but it is difficult to get everyone on board and to use it. Not everyone is tech savvy and understands. So It will happen at some point, but these are the changes, and we're evolving in this business day by day. In terms of career and industry advice, what advice would you give to someone that is just coming into the industry? Because like I said, there is no book that you can read about the stories that we're going to tell on this podcast. And I remember when I started in property management, I came from sales when I was involved with LP1 forms. And where I come from in my country, we don't have the freehold, leasehold. So it was very, very interesting. And it just becomes such a fascinating thing of like freehold, leasehold, what's going on? And I actually applied for a job without having any sort of knowledge of what block management is. And I was given 50 odd buildings, 100, close to 600 units on my own. There was no anyone else in the company doing block management. And I was like, wow, it was something that I wanted to have, that support from someone, which obviously at that time was supposed to be my director, but like to hold my hand and to guide me where to go and what to do. But I didn't have no regrets, obviously. I'm still loving what I do. But what advice would you give someone that is just starting and coming into all this?
Um, uh, Make sure you keep up your growth mindset and be willing to learn and always have a next milestone from a learning point of view. So one of our favorite values of our 6 values is we're always learning at JFM. And that has really propelled JFM from a 2-man startup to us now looking after close to 10,000 homes. And when me and James started our company, we knew that we didn't have all the skills necessary to manage a company, and we were, and I think that's one of the reasons. The honesty with ourselves was really, really important for our success.
Yeah.
And the thing is that at every stage and every incarnation of the JFM journey, there are always new challenges, and being willing to accept that you don't know how to deal with them at first, and then learning how, overcoming it, and going again for the next challenge.
Yeah.
It might sound corny, but it is the way to succeed. And what I would say, despite what some of the doom and gloom brigade have to say, there's so much you can achieve in this sector. As a youngster, you can go very far, and it's becoming more professionalized. And there's good salaries to be achieved with the right firms, and there's excellent development, and you can really go right to the top with the right growth mindset. Also, you've got to take advantage of more modern methods of learning,
Yeah.
and
Absolutely.
all methods of learning. So I love the TPI. I'm a fellow of the TPI, and I'm also a chartered surveyor, as I said, MRICS. And so my growth journey has taken me through those qualifications, and I encourage everybody to do their TPI for sure. But what I would also say is that a whole new batch of alternative learning is now springing out of the internet, basically, and especially since COVID. And a slight plug for the block coach, in that the block coach is looking to produce some alternative content for people working across the block space. And our first course, new block manager career jumpstart, is going to tackle a whole gap which I think exists, of that practical period in your career where you come and sit at a desk, and it can often happen through a hard fought promotion, sometimes from a promotion that's landed on your lap, sometimes
Yeah.
because you segued across from another industry.
Yeah.
TPI is great, but I feel like elements of the affiliate and associate are part of the journey, but there's a whole practical element which I think overlaps with the TPI journey
Yeah.
that we try to solve anyway. And whether it's us or someone else that you choose, be hungry for as much learning as you can get. Our solution tries to take you through a bunch of stuff that isn't necessarily traditional block management approaches, approaches to time management, approaches to how you think about customer relationships, how you keep the credit in the bank secure. And we draw on literature from across the business world, and then we mix it in with the RCS stuff and TPI stuff to complement that. And so I think if you're new and young and starting up, you've got to digest as much as you can. And in many ways, you've got a great advantage next to people like me and who've been in the industry for a while, developed bad habits, and that you can soak up all this alternative learning, and you can complement it all by verifying everything you read with AI, of course, now, and so yeah, just develop that growth mindset and take advantage of what's available to you to supercharge your career through learning and constantly learning is what I would say.
Absolutely. And the organizations that you mentioned and stories that we tell, they will all help.
Yeah.
And they will also help people like us, because have we seen everything in block management? I don't think so. So I think it is definitely something that.
Yeah, I mean, if anyone, if this becomes a clip on the podcast, or download Ralitsa's podcast, and while you're driving to your next site inspection,
Thank you.
pull it in. That's a big thing that me and James have always done, really, and continue to do, is lots of audible books.
Yeah.
I've moved across to podcasts a lot, and I think a lot of people are listening to podcasts now to get that alternative learning in. So this podcast is going to be great for you if you're young, starting out, and you're driving from site to site. Don't just by all means listen to your favorite music, but splicing a little bit of learning while you're driving to site, or while you're driving to work. Give yourself an advantage. Give yourself a competitive advantage with these alternative learning methods that we never had when we were kickstarting our careers.
Yeah, absolutely. And platforms are available. A podcast on camera. I think it's good for us to, to see you, because we don't often do that. And I think it's a bit more personal.
Yeah.
What is the biggest misconception people think about our role, you think?
I was asked this in the last podcast that I did.
Yeah.
I haven't changed my mind. I might use different words of saying it, but I think the biggest misconception that people have is based on the landlord and tenant idea. There's a landlord and tenant element to what we do, but we often get confused, I think, with the AST arrangement. That's assured short hold tenancies, whereby somebody pays in a rent to a landlord, and if the landlord saves money by not doing maintenance on his property, he doesn't blow his budget, and therefore he can make a profit. I think people think that's how we make money. Some people think that's how we make money. So people will pay in a service charge into a pot, and as long as we don't spend it, or we get to keep the rest.
Yes.
I think a lot of people believe that, and that the surplus basically is ours. Whereas, of course, it couldn't be further from the truth. If you're doing it correctly, that is. And the vast majority of people are, especially if you're ROCS regulated, you have to, or TPI members. Yeah, we get paid a flat fee. The fee is transparent. It's in the budget. It's built into the budget. And, we get paid the same whether the budget is in deficit or surplus. And we just deal with that surplus as per the lease. It's completely divorced from how much is spent on the block.
Yeah.
In terms of surplus deficit. And I think that's the biggest misconception that actually angers people, because they think if things aren't happening on the estate, it could be a cash flow issue also, because people aren't paying or whatever. They're thinking we're hoarding sometimes the money. It's a misconception. I think actually people are less and less inclined to believe that, but it is a big misconception that hurts us.
Yeah, absolutely. I think that concludes our conversation today, which has been great. And I would love to have you again anytime, and we can talk more about Block Coach and, what you're trying to do and what you're doing, and help new professionals coming to the industry to have that knowledge, or as much as knowledge that we didn't have when we started, because it is a great help, at least to kind of listen and to know, and all the avenues you can go into, and then choose your path, really. It's been great having you. Thank you for your time. Really appreciate it. And I hope to see you soon.
It's been really great. Thanks for the opportunity, Ralitsa. We'll see you again, or I'll see you again.